Good morning, fellow traders and investors from each and every part of the world that you're joining this series of the Daily Money Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various financial assets. Now, today being on the 15th day of the fourth month of 2025, we will dive a little bit alternate from the usual fiscal policy, where we see governments and heads of government causing market volatility and direction, and look the other way, where we will be looking at monetary policy. What is the likelihood of the effect on the Feds? And today, just like yesterday, we have our guest who was very insightful and very helpful in helping us understand the economic and geopolitical forces moving this particular market. That will be Mr. Shen. But before we dive right into it, this is going to be a pre-recorded YouTube video to mean that you could access this YouTube video at your own free and convenient time on our YouTube channel at HFM Kenya. Don't forget to like, subscribe, and click on the notification button. This will improve our algorithms. That is going to enable us create more content, which is meant to bridge the educational gap. So, beginning with fundamental analysis, Mr. Shen, what do you have in store for us today?
As you can see, we have seen soft numbers from CPI and PPI, which has led to falling inflation. And because of that, we have seen oil prices move down. And the movement of oil prices going down means it's better for the economy in the US. And yes, that's what I can say about the CPI and PPI soft numbers.
Awesome, amazing insight right there. So can't leave it. And so, with that in mind, the oil prices have been going drastically low. This is attributed again to the cooling inflation numbers that we saw last week. Mr. Shane Mwangangi has put it out clear that price printing below expectation, that is for CPI and PPI, is showing us less cooling inflation in the United States, and we have defined inflation on this series of the Daily Money Market Call as the cost of living. Interesting times to live in. I'm sure you agree, Mr. Shen. Amazing. So that would be considered a risk-off approach for short positioning in this particular regard. Moving on swiftly, Mr. Shen, what has been happening on commodity precious metal in reference to gold, as far as fundamental analysis is in play?
We have seen that gold has been on the rise recently, and we have detected all-time highs. And because of that, that's because of the conflict between China and US, which is causing uncertainty and making investors move to a safe haven again, like gold, which is advancing price to move. Thank you.
Amazing. So gold has printed its all-time high the day before yesterday, and now attempting to print the same. Would though wait for it to retrace to areas of interest, then get in to buy low. And fundamental analysis, which is economic and geopolitical forces, according to Mr. Shane Mwangangi, which I agree with, is we are likely to continue with a bullish trend. This is because of the uncertainties majorly brought by the two superpowers, that is China, the manufacturer of the 21st century, a powerhouse to be in coalition with, but in this time and place they are not in coalition with the United States like they have not been in the recent past. This is causing uncertainties, and investors are going to be drawing uh, to gold, causing it to be bullish. So, looking for long position across all four types of trade, I would consider a risk off approach. Is that so, Shen?
Absolutely.
Amazing, amazing. Moving on to stocks, beginning with US 30 group of stocks. And let's have a much more broader look into United States stocks and pick both heavy and penny stocks. That is the US 500. Mr. Shane, what do you have to say about this? Why are we having doji candles printing and somewhat consolidation in this particular regard?
Yes, as we all know, Doji represents indecision, and the indecision came to the market because of the 90-day post-tariff from Mr. President Donald Trump, and because of that, investors and both traders undecided on which way the market wants to go. Thank you.
So on the flip side, we have the 90-day pause, uh, putting on hold the optimism that investors and traders had. And I agree with Mr. Shane that the hold is causing indecision in the stocks market. Remember, we have picked the United States 500, US 500 or S&P 500, which gives us a much more broad aspect of this particular um, market. Now, moving on to currencies, what do you have to tell us about the United States dollar in regards to inflation, Mr. Shen?
Think about that. So, as we all know, when inflation when inflation reduces, it means that it's good for the economy, and because it's good for the economy in the US, we are expecting that the dollar should rise, as you also see that oil prices move. Thank you.
Or all right. So there, we have a slightly weakening dollar to mean that for United States base currencies like USDC, CHF, we are seeing print prints on the downside, so bearish in that particular regard, as much as um, the United States dollar is recovering because of the cooling inflation. On the other side, the fiscal policy, that is altercation of economy by heads of state governments in regards to Trump's tariff, seems to be weakening the dollar because of uncertainty for US dollar based currencies. That is US dollar coming in fast, printing bearish, and United States dollar coming second, like as a DUSD, we are printing bullish, suggesting a weakening dollar, awaiting for the Fed's decision to hold interest rates, most likely because of the cooling inflation. So I agree with you, Mr. Shane. Beautiful insights. It's a good time to be on the market, and just because of one of our loyal followers on the series of the Daily Morning Market Call, you know, she knows herself. Let us look at our JPY pair, USD JPY in that particular regard, printing bearish. This would give us optimism to get in for sales, just like Mr. Shane has told us. The dollar is seemingly being challenged due to the times that we are in, where we see the economic policy of the new administration of Donald Trump causing the United States dollar to reduce in its value to some extent. However, we have some positive news coming in. That is soft numbers showing that inflation is not much what of a concern, which will lead the Feds, or the Federal Open Market Committee, which is the central bank of the United States, to consider holding rates to have to wait for the aftermath of this particular phase in the history of the global economy. Now, As a disclaimer, this is by any chance not meant for financial advice. This is meant for purely educational purposes. Kindly remember to do your due diligence and remember to observe risk management. And as a vote of thanks, thank you, Mr. Shane. Any last word for us?
Thank you for the opportunity and happy hunting.
Amazing, amazing. See you tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, God bless you all and take care. I'm sure we shall be seeing more of Mr. Shane in the coming days. Cheers. You're muted. You're muted. Wa kidogo tumes